Good morning, everyone. Welcome back to our topic on returns in the subject of GST. So, in the previous class, we were trying to understand how these returns are operating, and at present, what is the mechanism of filing returns, what are the different types of returns, what is the content expected. Also, in order that you understand and appreciate the present format of returns, I tried to give you the picture of what returns were proposed originally. Then, having that system or mechanism failed, what were the returns that were planned to overcome the first failure, and how those returns, which were a temporary medium, were slowly eventually revised. And now we are at that point where the present set of returns are aligned or are in the process of being aligned to the original format of returns that were planned, that were envisaged. Now, in this, we had reached the purchase return. Earlier, it was planned to be GSTR 2, but as we discussed, 2 had failed. So, somewhat you can say 2 is being replaced by 2B. So, the format is like this. When the supplier uploads his outward supply details, supply information in his GSTR 1, that auto populates with you in your GSTR 2A, which is continued. And you also see the same thing in your GSTR 2B. And then we discuss what is the difference between 2A and 2B. So 2A of a particular month will keep on changing in future till the time the supplier is able to file his GSTR 1, which, if you remember, now the time limit given is 3 years from the end of the last date when you can file that return. So until 3 years, till your supplier is able to file his GSTR 1 or amend his GSTR 1, which is up to the next year's 30th November, your particular month's 2A may keep on changing with the details of new inward supplies being added or present supplies being modified. However, GSTR 2B is a document which is freezed. Freezed means that you once download a 2B of a particular month, thereafter that 2B will never change. So that is what is the major difference between 2A and 2B. Second difference between 2A and 2B is now we have a new functionality which has become operational and compulsory. Operational it had become last year only, but compulsory it became just from this October 25, which is the IMS, Invoice Management System. Now, what is this IMS? Now, when the supplier will upload his GSTR1 and the returns of 2A, 2B are created at your end, now you are given the option to change these information through this IMS. So IMS is a functionality where whatever details supplier has uploaded, which is appearing in your portal, can now be accepted, rejected, amended, that is modified. So now the recipient has been empowered to take one of these actions on the invoice and the details reported by the supplier so that Wherever now recipient feels that there is some mistake, either an invoice is wrongly uploaded or the details in the invoice are not correct, so the recipient is now empowered to take the action. Prior to this, this GSTR 2A or 2B was only a functionality of viewing what supplier has done, nothing else. But now, because of this IMS, now the recipient has also been empowered to take action on whatever is the reporting by the supplier. Another difference. Now, this is what I'm talking about is difference also between 2A, 2B, and also a new functionality called as IMS. So now, when you open a particular month's purchase side details, your invoices are reflected in IMS with the option of accept, reject, modify, and accordingly, whatever action you take. And after that, when you regenerate your GSTR 2B, the new GSTR 2B will be as per the details that this IMS or the action that you have taken through this IMS, that will be the new details that will be coming. Importantly, the difference, the next difference between 2A and 2B is 2A will only reflect the invoices. 2B will also tell you whether these invoices are available or not available for input tax credit. So 2B has gone a step further, that it is also incorporating certain details about the supplier, about the nature of supply, like what is the place of supply of this transaction, is it matching with your state, that is the state of recipient, then depending upon what is the inward nature of this supply, whether it is eligible. So now 2B has a column which says available or not available. This is not there in 2A. So this is some information about the comparison between 2A and 2B. Most important, 2B is generated on the basis of whatever GSTR1 the suppliers have filed by the respective due dates of GSTR1. So as we studied earlier, the due date for GSTR1 of a month, like for the month of October, now when we will be filing returns of October in November, the due date of GSTR1 is 11th of November. Now whatever GSTR1s are uploaded up to November 11th, midnight 12, that is the time till the date is 11th of November, those only would be reflected in 2B of October at the end of the recipient. If a supplier files a return even few minutes after 12 o'clock in the midnight, the details will appear in 2A of the same month, because 2A is, as we discussed, dynamic and it is reporting details of a particular month anytime uploaded by supplier. But those details will appear in 2B of the next month. So 2B is so designed, it is made so strictly designed that the supplier following the due date will only be able to provide you the credit in the same month. Geet is asking, in Form 2 it is written that TCS by ECO will be visible in 2A of supplier. It is not input, it is to be claimed in electronic credit ledger. Can you tell me the page where it is written? One 1.31. Details of invoices furnished by NRTP in Form 5. Details of invoice furnished by ISD in J6. Details of TDS deductor furnished in 7. Details of TCS e-commerce operator 8 are made available to the recipient. This part you are talking about? But then what is the confusion? Can you unmute and tell me, Geet?
Um, Sir, I mean to say that the TDS or the TCS which the director collects is visible to the supplier in the electronic cash ledger, where which he can claim the TDS or TCS credit and pay his outward tax liability through it. So
Right, right.
I my doubt is that is the TDS or TCS deducted by the deductor is visible to the recipient, or the tax paid by the supplier itself is visible to the recipient for ITC.
No, no, no. What is the confusion between this words supplier and deductor? Are you discussing about whether it is deducted by supplier, whether it is deducted by deductor? Is that the confusion?
नो नो, मतलब मैं ये बोल रहा हूँ कि जैसे कि अभी ईसीओ है, तो
Hmm.
ईसीओ सप्लायर को पे करने से पहले टीसीएस का अमाउंट डिडक्ट करेगा
Correct.
एंड वो गवर्नमेंट को पे करेगा। देन जो सप्लायर है, एक्चुअल सप्लायर, वो टीसीएस का क्रेडिट क्लेम करेगा इलेक्ट्रॉनिक कैश लेजर में। और
Correct.
जब वो अपना लाइबिलिटी डिस्चार्ज करेगा
Hmm.
अगेंस्ट द रेसिपिएंट, तो फिर वो अपना वो आउटवर्ड टैक्स लाइबिलिटी पे करेगा। देन दैट अमाउंट विल बी अवेलेबल टू द रेसिपिएंट so that he can claim ITC on that amount, right?
Okay.
हाँ तो
Are you confused by this part? Are made available to the recipient?
yes, yes, yes sir.
Don't means I understand. Now I understood your point. You mean to say बाकी सब तो ठीक है, मगर TCS ये एक्चुअल में सप्लायर का कलेक्ट होता है, बराबर? तो आपका
Yes sir.
बोलना है कि इट शुड बी यहाँ पे लिखा होना चाहिए आर मेड अवेलेबल टू द सप्लायर एटलीस्ट व्हेन वी आर टॉकिंग अबाउट द TCS पॉइंट, राइट?
Yes sir.
So that is correct, beta. See, what they have written are made available to the recipient, comma deductee और कंसर्न पर्सन। सो ये इन्होंने इन सबके लिए कॉमनली लिखा है, NRTP, ISD, TDS सबके लिए, राइट? सो बाकी सब तो किसका कट होने वाला है? रेसिपिएंट का, या ये बाकी सारी डिटेल्स रेसिपिएंट को ही दिखेंगी बिकॉज दे आर ITC ऑफ रेसिपिएंट, करेक्ट?
Yes sir.
बट TDS TCS में TDS भी तो सप्लायर का कट हो रहा है बाय द रेसिपिएंट, और TCS सप्लायर का ही कलेक्ट हो रहा है बाय द ECO, राइट? That is
Yes
why
sir.
they have further comma करके क्या लिखा है? So you have to read it like this: are made available to the deductee, are made available to the concerned person. Are you getting the point?
Yes sir. Okay sir.
So it is not necessary that you should be recipient only. So when it comes to TDS TCS, you are the supplier. That is why the word deductee is also added. Fine.
Yes sir.
Perfect. So now last lecture we concluded with discussion about the difference between 2A and 2B. I'll just complete the point with this last part. The statement in Form 2B for a month will be made available to the registered person for the first and the second month of quarter. Sorry, I need to read from here because this is relating to the QRMP. Uh, Geet, I think we had read this, na? GSTR 2B, it is static and all.
So we were reading it, but then Shafali ma'am continued the class.
Okay, so
We
can you
were
please read from here then for me,
Yes sir.
please?
GSTR 2B, an auto-generated statement containing the details of eligible ITC, is made available to the registered person for every month. It is a static statement and is available only once a month. It consists of the details of outward supplies furnished by the suppliers in Form GSTR1, other than a supplier who has opted for QRMP scheme between the day immediately after the due date of furnishing of GSTR1 for the previous month to the due date of furnishing of GSTR1 for the month. The details of invoices furnished by a non-resident taxable person in GSTR 5, details of invoices furnished by an ISD in his return in GSTR 6, and the details of an outward supplies furnished by his supplier who has opted for QRMP scheme in Form GSTR 1 or using the IFF, as the case may be, for the first month of quarter between the day immediately after the due date of furnishing of Form GSTR1 for the preceding quarter to the due date of furnishing details using the IFF for the first month of the quarter for the second month of the quarter between the day immediately after the due date of furnishing details using the IFF for the first month of the quarter to the due date of furnishing details using the IFF for the second month of the quarter for the third month of the quarter between the day immediately after the due date of furnishing of details using the IFF for the second month of the quarter to the due date of furnishing of Form GSTR1 for the quarter.
So what is this they are talking about is, as I was explaining, GSTR2B is such a strict statement that the supplier's filing of GSTR1 date is very crucial. So I was giving you this example that we are talking about October month's returns, which will be filed now onwards, since now we are in the month of November. Now, when October month's return has to be filed, the supplier, let us say I am the supplier and you are the recipient, the supplier is supposed to file his GSTR1 by 11th of November. I'm talking about a monthly supplier. Now, that is what is the first point. Now, if the monthly supplier has filed his GSTR1 by 11th November, you will be able to see the details in your October month's to be itself. But if the supplier files it even one day late, means the supplier files it on 12th of November. Now the range that is given over here is now from 12th of November to the next month's date of filing GSTR1, which will be 11th of December. So between this period, 12th November to 11th December, whatever details the supplier has uploaded in his GSTR1, that will appear in your next month's to be, that is November month's to be. So this is what is the point this particular discussion is trying to make out, that the due date, whatever are the due dates, like for ISG, it may be a different due date. So that is why they have not mentioned the due dates here, because they are referring to everyone. So whatever is the due date of filing your return, you have to ensure, like for ISD, the due date is 13th. So whatever ISD has filed the returns up to 13th of November 2025, that will be appearing in the recipient's ITC2B on or in the month of October. If the ISD files a return even few minutes after the close of the 13th day of November, up to the next due date, which will be 13th of December, those ITCs will be appearing in the recipients to be in the month of November. Similarly, where a supplier is a quarterly return filer, that is under the QRMP scheme with IFF facility. Now, whatever supplier has uploaded his invoice details using the IFF, again, the details that the supplier uploads, like here they were mentioning, now we are in the first month. So October, November, December, this is the third quarter. October is the first month. So whatever details the supplier furnishes between the day immediately after furnishing due date of GSTR1 of preceding quarter to the due date of furnishing IFF of the first month. So same. What was the due date of furnishing last GSTR1? That is of the previous quarter close. Previous quarter ended on 30th September. Last date to furnish GSTR1 was, let us say, 11th of October. So from that day till the IFF last day of the first month. Now, first month of this quarter is October. Last day to furnish is, let us say, 11th of November. So between this period, whatever invoices are uploaded, they will appear in my October returns. Similarly, from 12th of November up to the next month's IFF due date, which will be 11 December, whatever invoices details are furnished by supplier will appear in your November month's to be, and so on. So basically, the point that is to be that is mentioned over here is, like here you can see even the timing is mentioned. So the cutoff time is midnight 12. So if by midnight 12 o'clock on 12th, that is today's, let us say 11th, so 11th late night 12, so it becomes 12 o'clock. Whatever you file will appear in October month's to be. Even if you file anything one day after that, it will start appearing in the November months to be. So this is what is the point that has been emphasized over here. Now, what is the date of generation of 2B? The 2B will be generated on 14th of the next month. Now, interestingly, why 14th? Because if the supplier's last date to furnish GSTR1 is 11th, and after 11th, whatever things are filed by the supplier will go to the next month's 2B. Then why not the 2B is generated immediately on 12th? Why it is getting generated on 14th? Yes, Geet, you have rightly mentioned because the due date for QRMP is 13th plus the due date for ISD is also 13th. So in order to accommodate these two due dates, that is QRMP and ISD, which is 13th, they have kept the date as 14th. That is what is about GSTR 2A and 2B. Now we move on to the third part of our return. So GSTR 1 was outward statement, GSTR 2A, 2B was your inward statement. Now you come to your final returns. Now final returns are mentioned under 39.1, and as we discussed in the previous class, presently the final returns are for regular dealers, not for composition or ISG and others. For regular dealers, it is GSTR 3B. So it is said that 39.1 prescribes a monthly return. Now this will become quarterly for a few people. So firstly, basic rule they have given monthly return for registered persons other than ISD, NRTP, composition dealer, TDS deductor, TCS collector. So for all these, there are separate returns. Other than this, for all regular persons, the date of filing GSTR, sorry, not date, the form for filing your returns is GSTR 3B. Now, same like GSTR 1, if your GSTR 3B is nil, so it can be submitted through SMS. So 3B, if it is nil, you can send a message to your registered mobile number and your 3B will be filed. Now, what are the due dates? Now, the due dates have been staggered just to accommodate the load on the portal. So first, the regular due date is for monthly return filers 20th of next month, and for quarterly return filers they have given two due dates, 22nd, 24th. So they have divided between states the due dates. For few states it is 22nd and for few states it is 24th. So this will come only when the quarter has ended and you are filing the quarterly returns. Now comes the scheme which we were talking about in the previous class also, which is called as the QRMP scheme. Now the full form of QRMP is QR is quarterly return, MP is monthly payment. Now, if you are fitting in the quarterly return filing category, that you will fit if your turnover is below a specified limit, then you have an option that either you follow regular. What is regular? You file GSTR 1, you file GSTR 3B, everything once quarterly and nothing doing. But that was creating a challenge, which if you remember, we discussed in the previous class, that if I'm a quarterly return filer, you may not be interested in purchasing from me because whatever I'm doing, you will be getting credit only after 3 months, after I file my quarterly GSTR 1, because that will appear in your 2A 2B only when I file my GSTR 1. Hence, they have been given this option of following QRMP. In QRMP, I still have to file my returns, both GSTR 1, 3B, quarterly. But I have been given the option that I can start paying my tax monthly. So taking example of this current quarter which has started, so October, November, December, these 3 months form my third quarter of the year. Now, the returns for these 3 months, October, November, December, combined 3 months, I have to file in January whenever the due date of my GSTR 1 and 3B will come. However, since I want to pass on the credit to my suppliers immediately, like any other monthly supplier, I want to pass on the credit to my buyers immediately in the same month, I have been given this option of QRMP. Now, under QRMP, I will be filing the returns only once in the quarter. So, for all these 3 months, I'll filing GSTR 1 and 3B once in January. But what I have to do every month so that I can pass on the credit immediately is I have to pay tax. And if I'm paying tax, then I become a QRMP scheme person. QR is quarterly returns, MP is monthly payment. Now, how this will help me pass on the credit? So with QRMP, I am given the facility called as IFF, which we discussed in the previous class also, whereby I am allowed to keep on uploading the details of my invoices using the IFF facility. So when I use the IFF facility to upload the details of my invoices, the moment I upload these details, it starts reflecting in my buyer's 2A, 2B. Obviously, it has to be done by every month's due date. So for October, I should complete my IFF reporting by 11th of November so that it will appear in the same month's GSTR 2A, 2B. Now, in this particular case, when I am doing this particular filing, I have to also pay the tax. Now, the interesting point is I'm not filing any returns. Now, if I'm not filing any returns, how will I pay tax? Because see how my tax is computed, my outward sale minus my ITC of a particular month. Now, I have not filed my GSTR 1 because I'll be filing in January. Even in IFF, I am not uploading all invoices because I need not upload those invoices which are B2C because their credit is not to be passed on. And I even have a choice of not uploading all the invoices of B2B. So it is my choice where I want to upload. So let us say my B2B buyer is a composition dealer who is not going to get credit or who is also a quarterly return filer. So anyways, the person is not going to get credit. So in those cases, I may not upload those invoices immediately. I may upload it in Jan when I'm filing the quarterly GSTR 1. So in IFF also, I need not upload all invoices. And since I have not filed my complete GSTR 1, my total outward sales liability is not computed. Since I'm not filing my GSTR 3B, my ITC is not computed. So then how do I pay tax? So for that, there is a mechanism given. But before we go to the mechanism of computing the tax liability, which is done on estimated basis, well, let us first understand the whole scheme in detail. Can you please read better eligibility?
Eligibility for QRMP scheme: registered persons having an aggregate turnover up to 5 crore in the preceding financial year and who have opted to furnish quarterly return under QRMP scheme as the class of persons who shall furnish a return for every quarter and pay the tax due every month. Thus, the taxpayer whose aggregate turnover is up to 5 crore in the preceding financial year are eligible for QRMP scheme. For computing aggregate turnover, details furnished in returns for tax period in the preceding financial year shall be taken into account. Conditions to be fulfilled for becoming eligible to opt for QRMP scheme: registered person under QRMP scheme must have furnished the return for the preceding month as due on the date of exercising such option. A registered person shall not be eligible to opt for QRMP scheme if he has not furnished the last return due on the date of exercising such option. Manner of exercising option of QRMP scheme: a registered person intending to opt for QRMP scheme for any quarter shall indicate his preference for furnishing of return on a quarterly basis from first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is being exercised.
So if I want to opt for QRMP, let us say I'm a quarterly return filer. First 2 quarters I did not opt for. So when I started getting complaint from my buyers that they are not able to get credit immediately, they will stop buying from me. So I may decide to take up QRMP from the 3rd quarter. Now let us say I decide now that I want to opt for this option, which I have to do on the portal. This option I can exercise when? So for furnishing a return on quarterly basis, I can exercise this option from first day of the second month. Now, which is the second month? November is the second month in this quarter. So from 1st November, that is from yesterday, I can start exercising. Means I have the option of exercising this option. So first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is exercised. So from the preceding month's first day of the sorry from the first day of the second month of the preceding quarter till the last day of the first month of the quarter for which the option is being exercised. So let us say I want to exercise this now. Now in this particular case, I can exercise this option from first day of the second month of the preceding quarter. Now, which is the first day of the second month from the preceding quarter? So if let us say I'm talking about quarter October to December, when will this date start? Yes,
1st August,
it will start from 1st of
August,
August and up till when?
31st October.
Perfect. So between 1st of August to 31st of October, I can opt for this by intimating on the portal. Now, let us say once I have done it for a particular quarter, then I need not repeat this. What repeat this? Of intimating that I want to be in the scheme in every quarter. Once I've selected this option, it will continue for all further quarters until I decide to opt out of it. Now, next point is when this option of QRMP scheme will lapse, it will lapse when by default I come out of the quarterly return filer. Now, when I come out of the quarterly return filer, once my turnover exceeds 5 crore in any particular financial year. So, firstly, I am eligible for QRMP in this financial year if in the preceding financial year my turnover was below 5 crores. So, I was eligible in this quarter. But let us say after the first two quarters, my turnover has crossed 5 crores in the current year. Now, in this particular case, third quarter, I will not be eligible for QRMP because, anyways, I become a monthly return filer. Further, the facility for opting out of the scheme for a quarter will be available from first day of the second month of preceding quarter to the last day of the first month of the quarter. So that is the date is same. By choice also, let us say first two quarters I was in QRMP. Now I don't want to be in QRMP. So again, I have to intimate on the portal my option to opt out. And again, the timeline for it is same. Now let us understand the due dates for the forms. Please read, beta.
Form and manner of filing return GSTR 3B under the QRMP scheme. Due date for filing return in case of a taxpayer opting for QRMP scheme quarterly GSTR 3B on or before 22 or 24th of the month succeeding the quarter for which return is furnished. Due
So,
dates.
so for this quarter, October to December, the due date will be 22nd of Jan for few quarters and for few states, and for few states it will be 24th of Jan. Fine. Same NIL 3B, it can be filed using SMS. Now, maximum time limit for furnishing GSTR 3B. Same like GSTR 1, the maximum time now provided under the law to furnish GSTR 3B is 3 years. 3 years from the due date of furnishing that return. So every month's due date of 3B for monthly people is 20th. So from 20th of a particular month, you have to count 3 years. So let us say for October 25, if I want to know what is my last date to file GSTR 1 of October 25. So due date is 20th of November 25. So from 20th of November 25, 3 years will be 20th of November 28. So till that date, I can file GSTR 1 of October 25. Now, broadly, what GSTR 3B will contain. So both GSTR 1 and 3B, they can be filed up to maximum 3 years from their respective due dates. Now, what details are covered? So the basic details are the GST, legal name, and the period for which this return pertains. Most important is here you will see all details are summarized. Now this is not, or this was not the case in GSTR1. If you remember GSTR1, for B2B, I had to report invoice-wise details. For B2C, I was reporting summarized details. And in few cases like interstate supply exceeding a particular limit, I was supposed to give invoice-wise details. Otherwise, it was completely interstate. Yes. So otherwise, it was completely invoice-wise details. However, 3B is not invoice-wise. So all the details of your outward supplies and inward supplies under reverse charge is summarized. Further, interstate supplies even made to unregistered person, composition tax bill, everything is summarized. In fact, even your eligible, ineligible ITC, that is your ITC details, is also summarized. So in short, 3B is only giving summarized details. For individual details, you will refer GSTR1 for outward, and now you will refer GSTR2B after this QRMP scheme, which is giving you option of, it is giving now empowerment to the recipient to do changes. So individual details are available in 1 and 2B, but the consolidated details will only be available in 3B. Now, what if you identify any mistakes or errors? Let me first inform you. Under GST law, revision of return is not allowed. So no return, no statement can be revised. So once you have filed GSTR1, once you have filed GSTR3B, they are completely erased. Sorry, not erased. I mean to say they are completely locked. That month's 1 and 3B you cannot refile. Like how in case of income tax, we have the option of rectifying our return by filing the rectified return. There is no such option in this. There is no option of revising. Now, then what is this point rectification of errors? So if some errors have crept in GSTR1 or 3B, the law allows you to correct the errors in the next month's GSTR1 and 3B. So like in GSTR1, if you remember, we had an amendment table. Plus, you could even go and change the details of what you have uploaded in the invoice of a previous month in the current month. So when I am now filing October's GSTR1, I can go back and change the details of invoices of my previous months. So that is the type of rectification which is allowed. But the rectification I'm making of previous months is happening in the current month's GSTR1 or 3B. In 3B, there is no such option of making correction invoice-wise. So invoice-wise correction you will do in GSTR1. In 3B, what you will do is, so whatever changes you are making, let us say that is leading to increase in sales value, you will just simply add that much sales value in the current 3B and pay that extra tax. If it is leading to reduction in sale value, so from the summarized total sale value, you will simply deduct that much sale value. So in GSTR1, you can do corrections, rectifications by going to invoice-wise details through the amendment tables. And in 3B, whatever is the effect of this corrections in GSTR1, in 3B, you will only do the total net effect in 3B. Important is all these corrections, again, I repeat, will be in the current month's GSTR1 or 3B, the respective month in which the original these details pertain to or they were uploaded, that cannot be revised, that cannot be refiled again. That is an important point where you cannot refile any of the previous returns. Yes, the details of them can be corrected in the next period's returns. So instead of revising the return already submitted, the system allows changing the details of those transactions, that is invoices, debit, credit note, that are required to be amended. They can be amended in any of the future months 3B in the table specifically provided therein for the purpose of amending the previous details. Omissions or incorrect particulars discovered in the returns filed under 39, including returns filed by composition dealer, returns of TDS, ISD, etc., can be rectified in the return to be filed for the tax period during which such omission is noticed. So all past period omissions can be rectified in the current month's 3B. A tax and any tax payable as a result of such error or omission will be required to be paid, and obviously along with interest. Now, Exception is, it is important to note that this section does not permit rectification of error omission discovered on account of, very important. Means what? So if any scrutiny audit inspection has happened, so some action by the department is taken and basis the action by the department. If now you want to change it, so that is what is not permitted. Means what? Action by the department will not come under rectification. So see, once you are caught and now to save your skin, you will say that, okay, I'll change this in the next month's 3B. That is not allowed. So that is where you will be required to do it separately using the DRC03 mechanism. Hence, the taxpayer may not be able to pass on ITC to the receiver in respect of tax payments made by him in pursuance of any of the aforementioned situations. Now, time limit for making rectifications. The maximum time limit within which the rectification of errors omission is permissible is earlier of the two dates. And again, the dates is same. So this is the same date by which you can avail ITC. This is the same date by which you can file or upload credit notes. This is the same date by which you can rectify GSTR1. And this is the same date by which you can rectify the 3B. So in short, for any of the changes to a particular year, the last date is next year's 30th of November or filing this year's annual return in the next year, whichever is earlier. A return furnished under 39(1), that is 3B, on which self-assessed tax has been paid in full is considered as valid. Filing of returns for current month is possible only when returns of the previous tax periods and GSTR1 of the said tax period has been furnished. So if you remember in the previous class, I was mentioning this. Now, slowly and steadily, there is now internal check mechanism to ensure that you are a compliant taxpayer. So how it is, until unless you file past period returns, current period returns are not open, so that cannot be filed. And further, when you're talking about current month's 3B, it can be filed only when the past months and the current month's GSTR1 is filed. So if GSTR1 of current month is also pending, you cannot file 3B. A taxpayer needs to electronically sign the returns, otherwise it will be considered as not filed. Taxpayer can electronically sign the returns using a DSC, etc., etc. Now we come to the return which is applicable to composition dealer. Now, importantly, originally for composition dealer, the returns were quarterly. That is, the composition dealer were filing the returns every quarter. But later on, to ease out the burden, presently the scenario is that quarterly they will be making payment only. So every quarter they have to use a challan and make the payment on their estimates, whatever calculations they have. But the returns where they are going to report these details will be filed annually once. So this return, which is the return for composition dealer under GSTR 4, is filed only once in a year, and then there is obviously no annual return. Like for all others, we have even annual return because they have monthly or quarterly returns. But for a person who is under composition scheme, since their returns are itself annual, so there is no need to file again any annual return. So GSTR 4 for them is their periodic as well as the annual return. So GSTR 4 for a financial year or part of a financial year should be filed electronically. Fine. Quarterly statement for payment of self-assessed tax. Only you are required to furnish a statement in form GST CMP 08. So CMP 08 is like a challan where the details of your self-assessed tax for every quarter is contained. This you have to pay by 18th of the next month after the end of the quarter. So for the first quarter, April, May, June, it is 18th of July. July, August, September, it is 18th of October. October, November, December, it is 18th of Jan, and so on. What is the due date for filing this annual return GSTR 4? So GSTR 4 for a year should be filed by 30th June of the next year. So this financial year 25-26 GSTR 4 return will be filed by a composition dealer by 30th of June 2026, and this CMP 08 every quarter after the end of the quarter by 18th of the next month. Now, what details of outward supplies are required to be furnished in GSTR 4. It includes invoice-wise interstate, intrastate, inward supplies received from registered and unregistered persons and consolidated details of outward supplies. Now, why they have given invoice-wise details of inward supplies? Because anyways, they are coming from the suppliers who have uploaded the GSTR1. So that will be auto-populated in my 4A, right? So the inward supplies of composition dealer received from a registered person filing GSTR1 will be auto-populated in my 4A for viewing. Now, what are the broad contents of GSTR4? Consolidated details of outward supplies. Now, since I am not going to pass on credit, I cannot pass on credit. So irrespective of whether my sales are to a registered person or whether my sales are to an unregistered person, I will only be giving the lump sum details. That is, there will be no invoice-wise details submitted by me. Composition dealer are neither entitled for any ITC nor pass on the ITC. Therefore, composition dealer are required to provide consolidated details of outward supplies and not invoice-wise details. However, details of interstate, intrastate, inward supplies received from registered and unregistered is to be provided invoice-wise. Now, here there is a small, I'll say, practical difference. Inward details from registered is getting auto-populated because they have filed their GSTR1. So that is obviously coming invoice-wise. But from unregistered persons, I need not actually do invoice-wise. So people do it consolidated because that is what you have to file yourself. Discharge of tax liability, composition dealer are not eligible to take ITC. So they discharge their tax liability only by using the cash ledger. So obviously, since they are not eligible to take ITC, there is no question of utilizing ITC and no question of utilizing the credit ledger while making the payment. Again, nil CMP08 can be filed through SMS from your registered mobile number. And then these are the details that will appear in your GSTR 4. Can you read from here, Beta?
Statements returns for the period prior to opting for composition scheme. If a registered person opts to pay tax under composition scheme from the beginning of a financial year, he will, where required, furnish statements returned relating to the period prior to paying tax under composition scheme till the due date of furnishing the return for the month of September of the succeeding financial year or furnishing of annual return of the preceding financial year, whichever is earlier. The composition supplier will not be eligible to avail ITC on receipt of invoices or debit notes from the supplier for the period prior to their opting to pay tax under composition scheme.
So what is this point basically about? So let us say in the last financial year 24-25, I was a regular dealer, but my turnover remained below 1.5 crore, making me eligible to become a composition dealer in the current financial year. So before the start of this current financial year, I ticked the option of becoming a composition dealer. So from the start of this financial year 25-26, I am a composition dealer. But my previous year's returns of a regular dealer, like the GSTR 1 3B and then annual return GSTR 9, obviously will be filed in the current year only. So this point is basically clarifying that even though in this current financial year from 1st April 25, I have become a composition dealer, but still I will be required to do all the compliances of my last period's returns where I was a regular dealer. So all those returns will be filed by me as a as a regular dealer only in the current period, even though in the current period I have become a composition dealer. Next, please read.
GSTR 4 for the period prior to exiting from composition scheme. A registered person opting to withdraw from the composition scheme at his own motion or where option is withdrawn at the instance of proper officer will, where required, furnish
Okay.
GST.
Now, what is this point? Now, continuing the same example, last financial year I was regular. This financial year I had opted for becoming a composition, so I am a composition. However, now after I cross October 25, my turnover has exceeded 1.5 CR. So by default, I am outside composition scheme. Or I make some interstate supply of goods, so I'm outside composition scheme. So any of these reasons compel me to switch from composition to regular in mid of the year. See, this will never happen in the other scenario. You cannot switch from regular to composition in mid of the year, but from composition to regular, you will or you may switch because of the compulsion. Now, this may be done by your own self when you realize that, okay, this has happened. Or if you are not doing it by yourself, if the officer realizes that you are no more a composition dealer, the officer can withdraw. Now, the point is, let us say this happened on 31st October that I crossed the turnover of 1.5 crore or I made an interstate supply which is not allowed to a composition dealer. In this particular case, up to October, I am a composition dealer. From 1st November, I become a regular dealer. So the point is, up to 30th October, I should have filed and paid tax as per a composition dealer. Now, for the first 2 quarters, I would have paid tax already. But for this third quarter, which has started from October, 1st October to 31st October, I was under composition for which I am supposed to pay tax on 18th of Jan using the CMP 08. But now, when I come to November, I am no more a composition dealer, I am a regular dealer. So the question is, what I will do of my CMP 08? So that is what is clarified. CMP 08 relating to the period prior to his exiting from composition scheme, that is up to 31st of October, has to be filed by 18th of the month succeeding the quarter in which the date of withdrawal falls. So my withdrawal date falls on 31st of October. So again, 18th of January is my due date for filing the GST CMP 08. Now CMP 08 GST will only pertain to 1 month, that is October 25, because from November I will be filing my regular returns. Similarly, when I will when this year will close, I have to file my GSTR 4. This GSTR 4 I will file considering period from 1st April to 31st of October. That is the period in which I acted as a composition dealer. And this has to be filed by me by 30th of April following the end of the financial year in which this particular option is withdrawn. Now, as per 29.2, a proper officer is empowered to cancel my registration if the person under composition scheme has not furnished GSTR 4 for a financial year beyond 3 months from the due date, or any other taxable person has not furnished return for a continuous tax period as may be prescribed. Okay, so that is fine. That is mainly applicable when officer can cancel your registration. So now this is whole details about how I will be filing my returns for that part period and how I will be paying the tax. So this is when I'm converting from regular to composition. This will happen only at the start of the year. This is when I'm converting from composition to regular, and it is happening in middle of the year, which is possible. Now coming to some more returns. Please read.
GSTR 5 return for non-resident taxable person. Section 39.5 read with Rule 63. Non-resident taxable persons are those suppliers who do not have a business establishment in India and have come for a short period to make supplies in India. They would normally import their products into India and make local supplies. The concept of non-resident taxable person has been discussed in Chapter 8. Monthly return. A registered NRTP is not required to file the statement of outward supplies and return which are otherwise applicable for a normal taxpayer. In place of the same, a simplified monthly tax return has been prescribed in Form GSTR 5 for a NRTP for every calendar month or part thereof. The details of outward supplies and inward supplies of an NRTP are incorporated in GSTR 5. Last date of filing return. GSTR 5 should be filed within 13 days after the end of the calendar month or within 7 days after the last day of validity period of the registration, whichever is earlier.
So I hope you all understand what is the second part. This we discuss even in CTP. So since CTP, NRTP, they are registered only for a short period. Now, short period is said to be maximum 90 days. Now, let us say an NRTP has come to India to participate in an exhibition which is of 15 days, that is 2 weeks. Let us say exhibition starts from 1st of November. So from 1st of November, to 15th of November, they will be participating in this exhibition, and thereafter they will leave the country. So for them, the due date for filing this return will be 7 days after the last day of the validity of registration. So their validity of registration, they have taken registration for 15 days. So 15 days ends on 15th of November. So by 22nd of November, they will be filing the returns. But if they have taken registration which extends beyond the months, then they have to file within 30 days after the end of the calendar month. So let us say he has taken registration for whole 90 days, which is the period allowed. Then for November month's details, he has to file GSTR 5 by 13th of December. But sorry, for October by 13th of November, for November by 13th of December, and so on. Payment of interest penalty. Any NRTP should pay tax interest penalty. That is fine. Same like any other dealer. Question is whether NRTP is required to file any annual return. Logically, no, because by the time the date of annual return comes, which will be in the next financial year, he is not in India. So there is no requirement for him to file the annual return. Next is GSTR 6. I'm sure by now you all will be knowing what is the concept of ISD. So ISD is that office out of all the different registrations that you have taken, which is receiving common inward supplies. And that common inward supply is such that it is being utilized, it is being benefited by different units under the same PAN. So let us say you are a company with multiple units across India and you have one corporate office in New Delhi. So this corporate office is incurring some common expenses of which the benefit is enjoyed by all the units or some of the units. So this New Delhi office has to take, besides the regular registration, has to take one special registration which is called as ISD. And every month, whatever common input credits have come, it should be taken in the registration of ISD. That is, it should reflect in the ISD returns. And every month, they should be filing their ISD return to distribute this credit to all their recipients who are their other units. Now, all this is done through filing GSTR 6. Yes, but please read.
GSTR 6 return for input service distributor. An ISD is required to distribute both eligible as well as ineligible credit as per Rule 39. Monthly return. ISD is not required to file statement of outward supplies with its return. It needs to file only a monthly return in Form GSTR 6 for distribution of ITC amongst its units. Form GSTR 6 contains the details of ITC received for distribution, total ITC, eligible, ineligible ITC to be distributed for the tax period, distribution of ITC, ISD invoices and ISD credit note, details of debit credit notes received, etc.
So see, basically ISD is only for internal transaction, if I can say. So ISD is receiving common input service ITC, and it is distributing this ITC only to its units. So ISD has no transaction with any outside world. ISD is formed exclusively for distribution of common ITC internally. So that is why there is no GSTR1 type of outward statement required, because whatever they are distributing, that can be reported in this monthly return, which is GSTR 6. So GSTR 6 will basically contain all these details of whatever ITC they have distributed. And if after distribution they have raised some debit credit notes, that will be given. And on the inward side, whatever ITC they have received from outside suppliers, plus if outside suppliers have given them any debit note, credit note, all those things will be reported. Now the due date for filing GSTR 6, so every month after the end of the month, by the next month's 13, you have to file this return. Whatever suppliers are reporting in the name of ISD, that will appear in GSTR 6A of the ISD. So same like 2A for other regular dealers. For ISD, in their 6A, they are able to view what are the inward invoices. So Form GSTR 6A is a system generated draft statement of inward supplies, and ISD can view this auto-populated details. Nil return, same like others. ISD, if they are having nil return, so a nil return is to be filed in case of no ITC being available for distribution. So here they have not mentioned about the SMS facility, but they have said that nil return has to be filed. Just 2 minutes comfort break. We'll be back in 2 minutes, students. Is of TDS. So as we all know, in case of GST, the TDS is to be made only by one person or one category of person, that is government, with respect to supplies where the contract value exceeds 2.5 lakhs. So this is the only scenario under GST law where TDS is made applicable. Now, if you compare it with income tax, there are some striking differences. First is income tax. The TDS of income tax is qua a particular nature of receipt or nature of payment. So if a businessman is making payment of salary, of interest, of rent, so it is qua the nature of payment and not qua the person for whom or to whom the payment is done. Whereas under GST, the TDS is not qua the nature of supply. So, what is the nature of transaction that a supplier has entered into with government or government agencies is immaterial. So, supply can be either of goods or of service or of anything. But the TDS is qua transaction with government. So, whenever you are having a transaction with government, center, state, or local, or with any of the government agencies, then the government agency has to deduct your TDS. So this is the striking difference, that it is not qua the nature of supply, it is qua the recipient of supply, who is government. Now, when the government is deducting your TDS, so the government becomes a deductor, the government has to file their monthly GSTR 7, which is the TDS return. Again, this is different from income tax. In income tax, the returns of TDS are filed quarterly. Here, it is monthly for the simple reason that whatever TDS has been deducted by government in this current month, let us say in the month of October, that should be available to you as uh, credit of cash ledger in the same month, so that you can set it off against your output liability. That is why here the returns have been made monthly. By when it has to be filed? So it has to be filed after the end of that month by 10th of next month. So once October ends, the TDS returns for October deductions have to be filed by government agencies by 10th of November and so on. Now, once I file my GSTR 7, and in which I have given your GST number with the details of tax deduction, it appears in the common portal in your 2A, 2B in the respective category, where you can see the returns. And once you accept it in your portal, the amount gets credited to your cash ledger, from where you can utilize it for making payment. Further, a TDS certificate is generated by the system in 7A for both deductor and deductee. The certificate is generated once the deductor furnishes returns in GSTR 7 on the portal. Now, along with returns, the next point is, what is the due date for making payment of taxes under GST? Please read.
Every registered person who is required to furnish a return under subsection 1, other than the person referred to in the proviso thereto, or subsection 3 or subsection 5, shall pay to the government the tax due as per such return, not later than the last date on which he is required to furnish such return. However, every registered person furnishing return under QRMP scheme shall pay to the government in such form and manner and within such time as may be prescribed an amount equal to the tax due, taking into account the inward and outward supplies of goods or services or both, ITC availed, tax payable, and such other particulars during a month, or in lieu of the amount referred to in clause A, an amount determined in such manner and subject to such condition and restrictions as may be prescribed.
So, for all monthly return filers, they are saying that by when are you required to pay the tax? Now, interestingly, technically, there is no due date given in the law for making payment of tax separately. It is simply the date by which you are filing the returns. So, the returns are so designed that without making payment of tax, your returns cannot be filed. So, by default, the due date for filing returns automatically becomes a due date for making payment of tax. And hence, when interest is also computed, the interest gets computed on the basis of due date of filing returns. So if you are discharging your tax liability later, then the interest will be calculated on the basis of the last day to file the returns, and from the next day the interest meter will start. So technically there is no separate due date given in the law for making payment of tax, but it is by default the due date of filing your returns. Now, in this payment of tax, what we are going to understand an interesting point is in respect of QRMP scheme persons, those who have availed this QRMP, now every month they are having this facility of uploading their invoices through IFF so that their recipient can get the ITC. But the logic or the not even logic, the rule of law is that recipient will get ITC only when supplier will pay tax. Now, if this QRMP supplier is going to file his GSTR 3B in January, how will you get credit in October itself? So for this, the law has provided this concept of QRMP where even though you are filing your returns in January by the due dates, you can pass on the credit in October, November immediately. And for that, you have to pay the tax in October, November. That is what is monthly payment. But then the question is, how will you make payment of October and November? Because until unless you file the returns, the computation is not done. So here they have provided a mechanism to compute the tax, and on the basis of this mechanism, the tax has to be paid by you for the first 2 months. And after the first 2 months, when the third month will close, that is when you will be filing your actual return for that quarter, the payments made in the first 2 months will get adjusted. And while filing the returns, after the end of the quarter, you will pay the differential amount. So now the question is how to determine the first 2 months payment. In this, again, there is an option given. So a QRMP return filer has been given two options to determine its monthly tax liability for the first 2 months, because third month will be covered in the quarter's return and there you will get the actual tax liability. Here it is on a you can say estimation basis. For that they have given two methods. One is the fixed amount method and the other is self-assessment method. So under self-assessment method, they are relying on your internal calculations, whatever you have made. So you make your internal calculations and whatever is the figure, you keep on paying. Fixed sum method, they have given a mechanism whereby depending upon the past period's tax liability, they will determine how much you have to pay in month one, month two. Let us understand. Please read.
A fixed sum method. If a taxpayer chooses this option, a facility is available on the GST portal for generating an auto-generated pre-filled challan in form GST PMT06. The challan amount is calculated by the system which cannot be edited. This amount is equal to
So, as I said, if you opt for this fixed sum, the calculation is done on the basis of your past period's tax. So that is why it is pre-filled and it is non-editable because the system can calculate that. System has your past period data. Now, how is this calculated? Let us understand.
35% of the tax paid in cash in the return for the preceding quarter where the return was furnished quarterly, or tax liability paid in cash in the return for the last month of the immediately preceding quarter where the return was furnished monthly.
So if you are having last period's quarterly returns, so let us say now I'm in the third quarter, so I have my last quarter's quarterly return. In that, whatever amount you paid through the cash ledger, because whatever ITC you had availed, that was knocked off against your liability, that anyways you need not pay because now also you are paying the amount through cash ledger. So we see the cash payment of last quarter and 35%. Why 35? Because roughly we need to take one third. Because for the whole quarter, whatever is the liability, out of that you have to pay only one third in 1 quarter, 1 month. So that is why it is roughly one third. So they have made it round figure 35% for ease of calculation. Second, if your last period was a month, so let us say when this financial year started, in the previous financial year, you were filing returns monthly. Or even let us say in the current financial year, even though your turnover is below 5 crores, you have continued filing returns monthly. Now you are switching to quarterly. In any case, when your previous returns filed are monthly, then whatever is the last return filed, last monthly return filed, whatever is the cash liability, simply you have to pay that cash liability. So that is simple. If monthly returns are filed, then immediate last month's return filed, cash liability you have to pay now. If quarterly returns filed, then whatever is the cash liability of the previous quarter, one third of that, average or roughly made 35%. That is a simple calculation given. Continue.
However, no such amount may be required to be deposited for the first month of the quarter, where the balance in the electronic cash ledger, electronic credit ledger, is adequate for the tax liability for the said month, or where there is nil tax liability for the second month of the quarter, where the balance in the electronic cash ledger, electronic credit ledger, is adequate for the cumulative tax liability for the first and the second month of the quarter, or where there is nil tax liability.
So simple
Monthly.
point what they are saying is that whatever this 35% is coming to, if that much amount is lying in your cash ledger, then no need to pay, because whatever is in cash ledger is as good as, means it is assumed it is with government only. So you need not pay that liability. Similarly, you need not pay the second month's liability also if first and second month total, that is roughly 70%, whatever is the amount coming, that is already lying in your cash ledger or credit ledger. Monthly tax payment through this method would not be available to those registered persons who have not furnished return of the previous month. A complete tax period means a tax period in which the person is registered. Fine. Now, self-assessment method. So first was the fixed payment method where the liability is computed basis your past period returns. Now the second option. Please read.
Self-assessment method. The said person in any case can pay the tax due by considering the tax liability on inward and outward supplies and the ITC available in Form GST PMT 06. In order to facilitate ascertainment of the ITC available for the month, an auto-drafted input tax credit statement has been made available in Form GSTR 2B for every month. The registered person under QRMP is free to avail either of two tax payment methods above in any of the 2 months of the quarter. As already discussed earlier, at the time of filing the return for a quarter in Form GSTR 3B, the amount deposited by the registered person in the first 2 months of the quarter shall be debited. Further, any amount left after filing of the quarters of that quarter's Form GSTR 3B may either be claimed as refund or may be used for any other purpose in subsequent quarters.
So simple. So you follow any one of these methods in the first 2 months, and thereafter, when you file the quarter's return, in that quarter, what is the final liability? That will be knocked off against what you have already paid in the first 2 months. If the amount paid by you in the first 2 months is higher than the actual liability that you get quarterly, obviously the balance you can take back as refund, or you can let it be there, you can utilize in your next period. Now the most interesting part is interest. Despite of the law providing its own mechanism to compute this monthly amount what you have to pay in the first and the second month, still they have made a provision for interest. For me, this is something slightly not acceptable. Why? Because I'm following the method given by you. Still, you are asking me to pay the interest. That is where the point would be interesting. However, what is important to know is no interest would be payable in case the tax due is paid in the first 2 months of the quarter by way of depositing auto-calculated fixed sum as discussed above. It means indirectly they are asking to pay interest only where one, I have used the self-assessment method, or two, I have used the fixed sum method, but the amount paid by me is less than that 35% mark. So, in other words, if while furnishing 3B it is found that in any or both of the 2 months of the quarter, the liability net of available credit on the supplies made receive was higher than the amount paid in Chalan, then no interest would be charged provided they deposit system calculated amount for each of the first 2 months and discharge their entire tax liability. In such, in case such payment of tax by depositing the system calculated amount is not done by due date, interest would be payable. This is obvious. So if you're not depositing by the monthly due date, you have to pay interest. Further, in case of 3B, for the quarter is furnished beyond the due date, obviously again the interest liability will trigger. Next, can we read B?
For registered person making payment of tax by opting self-assessment method, interest amount would be payable as per the provision of Section 50 for tax or any part thereof net of ITC which remains unpaid, paid beyond the due date for the first 2 months of the quarter. Interest payable, if any, shall be paid through Form GSTR 3B. Note if it is it is clarified that no late fee is applicable for delay in payment of tax in first 2 months of the quarter.
So again, if you are making payment late by the monthly due date, you will be required to pay interest, but there is no late fees. Now coming to a very interesting return, because this is filed only once in the lifetime of that taxpayer registration. This is called as the first return. Now, what is the relevance of this first return? Let us understand. So for this, we have to go back to the provision of registration first. So let us say on 10th of October, that is in the last month, I crossed the threshold for becoming registered. So till now I was unregistered because my turnover was below the threshold. On 10th of October, I crossed the threshold. Now the law provides me 30 days to apply for registration. So let us say I apply today. So 10th October, I crossed the threshold. 2nd November is well within 30 days. I apply today. But the entire procedure which is given for registration, that takes time. And I get my registration on 15th of December, the registration number. Now, when I get my registration number on 15th of December, the first return that I will be filing will be after the end of December, that is in the month of January. Now, since I had applied within 30 days, the law says my registration is made effective from 10th of October. That is the date on which I became liable to register. So 10th October, I became liable. Today, 2nd November, I have applied. I actually received my registration certificate and number on 15th of December. And for all this period, I am considered to be registered from 10th of October. Now, in the previous chapter of invoices, there is a concept of revised tax invoice. What is revised tax invoice? Revised tax invoice, again, a clarification. Under GST law, you are not allowed to change an invoice, a debit note, credit note once it is prepared. You can maximum nullify it using the option given in your GSTR1 table of amendment and all, but you cannot cancel that invoice. So let us say I prepared one invoice and I find there is some mistake. Can I cancel it? Yes, you can cancel it, but you cannot revise it. What you can do is you can go to the GSTR1 amendment table and over there you can change the figure, or where required you can use debit note, credit note. But what is important is you cannot scribble and change that same invoice. So when I'm talking about revise invoice, it is not allowing any invoice to revise in the regular course. Then what is revise invoice or revised tax invoice under GST law? Revised tax invoice under GST law is applicable only for this one scenario. So I got my registration number on 15th of December. Understand this. But law says you are registered from 10th of October. Now, the day when I cross the threshold, that is 10th of October, and I know that I am going to apply in time, I have been informing all my customers who are purchasing from me, look, now I am coming in the registration category. Though I have not yet received registration because I'll make application, there will be a process. But since I have come in the registration category, now I am eligible to charge and pass on the ITC to you. But today I cannot do it. Like today also, if I have applied for registration, I'll tell all my customers that today I cannot give you any credit because today I'm having no number. So let me sell you the goods service without charging you any GST. So today I am making kacha invoice with only the details of good service, with only the value of good service. But I have committed that whenever in future I get the number, I will change all these kacha invoices to pakka invoice. So these kacha invoices, which I have issued post 10th of October, till 15th of December, till the date I get registration number. Law permits me to make this pakka. How pakka? So all these kacha invoices which I have prepared, obviously I would have taken the details of all those customers. I will give them a pakka invoice in place of that kacha invoice. That is the only scenario of revised tax invoice. Now, when I will be filing my first return, which will be after the end of December, the special point about first return is this return is not only covering December month's transaction. In fact, it is covering all transaction from 10th of October. So from 10th of October till 31st of December, all my transactions which are done by me will be reported in this one single return. That is what is the relevance of this first return. So, in order to enable such registered person to declare the taxable supplies made by him from the period, which period? The date on which he became liable to register till the date of on which registration has been granted, so that ITC can be availed by the recipient on such supplies. Firstly, the registered person may issue revised tax invoice against the invoices already issued, which is the kacha invoice, within a period of 1 month that is given. And then further section 40 provides that the registered person shall declare his outward supply made during the said period in the first return furnished by him after the grant of registration. The format of this return is same. So there is no change in the return. The return on the portal is same only. The difference is this return incorporates even your kacha invoices converted to pakka, and this return will be covering a period beyond 1 month. Next, TCS. So TCS details you would have studied in the chapter of electronic commerce transaction. Now coming to annual returns. Now annual returns, Geet is having a question. Will ITC on goods service purchase from effective date of registration to grant of registration be allowed to new registrant? Yes, yes. That is the importance of giving you a backdated effective date of registration. So whatever purchases also you have made, all purchases post 10th of October will be available to you as ITC. But again, how? So when you are making purchasing post 10th of October, you will inform all your suppliers ki boss, right now I am not having my GST number, so I am not communicating to you. So presently you may report my transactions in B2C, but the moment I will get my number, I'll inform you. By that time, if the return due date has not come, you report it as B2B. Or if the return due date had come and you had filed the return, uploaded my invoice in B2C, you do correction of my invoice from B2C to B2B. So this is how the new registrant is also entitled to get the credit from 10th of October till the date of registration. Now coming to annual return. Now basically annual return is mainly applicable to all the regular registered persons. It is not applicable to CTP and RTP because they will not be in existence till that date. It is not applicable to ISD because ISD is not doing any transaction. It is just internally distributing the credit. So monthly return is sufficient. And for TDS, TCS, no need of annual return. The commissioner may, on the recommendation of council by notification, exempt some class of persons from even filing the annual return. So that is done every year. So they give a turnover limit. If your turnover is below that limit, you may not file the annual return. Now we go to the details. Please read.
What is the prescribed form for annual return statement? Annual return is to be filed electronically in Form GSTR 9 through the common portal. Person registered under composition levy, a person paying tax under composition scheme is required to file the annual return in Form GSTR 9A.
Now, practically, see, this has no relevance now. Why? This had relevance when the composition dealer were required to file quarterly return in GSTR 4, so they were supposed to file a annual return in 9. Now, we have already seen that GSTR 4, which was earlier quarterly, is now itself made annual. So, there is no much relevance of 9A, but still the portal has this 9A. So, a composition dealer practically does the same thing twice, makes his annual return in 4, and the same details are again repeated in 9A. Read the box.
It may be noted that an ECO required to collect tax at source has to file an annual statement referred to in Section 52(5) in Form GSTR 9B, yet to be notified. The statement for a financial year need to be filed by 31 December of the next financial year.
Okay, so but this is yet to be notified. So practically, there is only one annual return, that is GSTR 9 for all regular registered suppliers. Now, along with 9, which is the annual return, there is one more statement which is 9C. Now, what is this 9C? Now, we all will now, by now, since you all are in final, you all would have done articleship and would have seen that when you see accounts, when you see taxation laws like income tax, and then when you see GST, there is one very big difference. That is the difference in the principles, in the ideologies, which we can call as the law or the standards. So accounts has its own standards of identifying and reporting transactions for a particular year. It has its own way of calculations. It has its own way of reporting things in P&L balance sheet. And similarly, income tax law and similarly, GST law. Now, in GST, we have something called as time of supply, whereby we means the GST law decides what should be considered as transaction for a particular month and hence a particular year. Now, this timing can be different in GST and in income tax and even in your accounts for certain items. In fact, it is different for certain items. Secondly, like another example of difference is GST law presumes that the life of a capital asset is 5 years. No such presumption is made in income tax. In fact, it has given its own mechanism of block method of computing depreciation given its rate. And similarly, accounts will follow accounting standards, or if any particular act is applicable, like Banking Act, Companies Act, you have to follow that act. Now, because of this, what happens? What a particular business is reporting in one financial year, the figures, even though they all pertain to the same entity for the same financial year, the figures of sale, purchase, a particular expense, or even balance sheet figures are different for the purpose of accounts, are different for the purpose of income tax, are different for the purpose of GST. Now, GST law has brought in this, I believe, a very good concept called as reconciliation statement, which is in this form 9C. Now, firstly, this statement has been made applicable only to large taxpayers. So for that, the criteria given is if your turnover is exceeding 5 CR, then only you need to do this reconciliation. Now, here they have written self-certified. Originally, when the GST law was introduced, and if I recall it correctly, I think up to 2020, the certification had to be done by a chartered accountant or a cost accountant. Now they have removed that requirement post 2020, and now 9C has to be certified by the dealer himself, herself, itself. So it means now they do not require a CA for signing it, though practically all refer 99C to their chartered accountants only, so that at least if monthly is done by them internally, at least the final return is done properly through proper professional, so that if anything is missed out incorrect, that is rectified, corrected in the annual returns. Now, what is this reconciliation statement? So the reconciliation statement is, you can say, an activity which in future the department officer does or was required to do has now been passed on to the dealer itself. So earlier, when a business was filing their returns, firstly monthly and then annual, the business's responsibility was over. Now in future, when the tax department wanted to check that whether you have correctly assessed your tax liability or not, what they will do, they will definitely first ask for books, because books are the only, you can say, medium through which any person can come to know what is your business, what are your transactions, etc. But whenever they used to call for your books, the first challenge the tax officer were facing is that your books are prepared using some accounting standard principles or using your respective Companies Act, Banking Regulation Act, Insurance Regulation Act, all those respective laws. And there would be definitely certain figures which appear different in your books as compared to your tax return, but no one is wrong. It is only a matter of timing difference or only a matter of presentation difference. So it used to be a challenge for the tax officers to assess, to understand whether your written files are correct or not, because they are using the base documents as your books, which are bound to show different figures without there being any mistake or any fraud. Hence, the first step every time the department used to come for their assessment audits was doing a reconciliation, which was unnecessary, consuming the time of the officer. Now, this time consuming activity has been shifted to the business, that they are put on or cast with this responsibility that every year, when you are preparing and filing your annual return, you also give us the reconciliation statement, so that even before we come to you, that is, the officer comes to you, they will make their self assessment, desk review, and check on the basis of your reconciliation that even if the figures which are reported in your books, which may be published now, on now different laws requires publishing your financial details. So from there they will get your financial details, and even if the figures are not matching, they will refer this reconciliation statement to find out what the reasons for differences are. And if they are satisfied with the reasons of difference, the matter is closed there and there itself. Only where they still feel that there is something not appropriate as per law, then they may take their corrective action. So this is what is the whole ideology of this reconciliation statement. Again, who are not required to file reconciliation statement? Obviously, those who are firstly not required to file annual return are not required to file reconciliation, because reconciliation is between your financial books, P&L balance sheet with your annual returns. So those who are not having annual returns obviously need not also file the reconciliation statement. So presently this statement, which is a self-certified statement, is filed in 9C, and in this you reconcile your financial books with your GST annual return. Now, as we studied, government from time to time has the power to exclude someone from not complying with this requirement. So exemption from requirement of furnishing annual returns, the Department of Center State Government local authorities whose books of accounts are subject to audit by CNAG, or an auditor appointed for auditing the accounts of local authorities under any law, are exempted from the requirement of 9 and 9C both. What is the time limit for furnishing annual return? It is same. So 1, 3B, 9, for all, the time limit is same. 3 years from their respective due dates. Now we come to another return, which is your last return. Now, like we studied the first return, this is your final return. Now, obviously, when final return will come, when the person exits from GST. How? By way of cancelling the registration. So a person who is cancelling the registration is required to sort of close all their matters by giving their final return. So this is the opportunity given, that in case if something is left out, you can do it. Also, another reason is that many times when you will be cancelling, you may be cancelling in between the year. Now, in this particular case, later on, you will not come back to file the annual return. So this is also an opportunity to file the whole period's details in one return. So maybe by now you have been filing monthly or quarterly returns. Now consolidate all into one return so that the tax officer can make a full and final assessment. This is in form GSTR 10. Now, what is the timeline given for furnishing this? The final return has to be filed within 3 months from the date of cancellation or the date of order of cancellation, whichever is later. Now, what is the difference? The difference is where officer does it, it is at their end, and where you have applied, it is the date of order of cancellation. Next, GSTR 11, details of inward supplies of persons who are registered but not like a regular businessman, but a special category of registrations who are having the UIN. Now, we all know who is covered in UIN. It is those international bodies, agencies which have set up their offices in India as per various international treaties. They are not in India for any commercial or business activity. They are here just for the purpose of having a setup in every country. So, like you have the WHO's office, you have different foreign government consulates. All these are covered under the special category of registration of UN. Now, what is the purpose of giving them registration? See, they are not making any outward supply, or whatever would be their supply that is being specifically made exempt. Then why do they require this registration? For the purpose that when any other supplier is supplying them goods or service, this UIN will get the ITC, and later on they can claim the refund of this ITC. So for the purpose that they can claim refund, they are allowed this special registration, and they need to file their returns, which is in GSTR 11. Please read.
GSTR 11, details of inward supplies of persons having UIN. Rule 82, every person who has been issued a unique identity number is required to furnish the details of inward supplies in Form GSTR 11 when UIN is issued for claiming refund of taxes paid on inward supplies. Such person shall furnish the details of those inward supplies of taxable goods and/or services on which refund of taxes has been claimed in Form GSTR 11, along with application for such refund claim. When UIN is issued for purpose other than refund of taxes paid, such person shall furnish the details of inward supplies of taxable goods and/or services as may be required by the proper officer in Form GSTR 11.
Next is
GS
5A. This is return for OIDER services. Now, what are OIDER services? Nowadays, we are enjoying, consuming many services which are provided online. And these are those services where the supplier is nothing but maybe an app or a portal. So, like today we consume so much of OTT content. All these OTT service providers come under OIDER category. Now, if this OIDER person is a person who is sitting outside India, and the recipient is a person who is a non-taxable person in India. See why this differentiation has been created? Because if a person is sitting outside, the supplier is outside, then generally in such cases we call it as import of service, and the liability to pay taxes on the recipient. However, if you talk about this OTT channel, the simplest example, who are the consumer? The consumer is common public and families. Now you cannot ask each and every family that on the OTT subscription, whatever you are paying, you also pay tax under RCM and do compliance under GST. So practically that is not possible. But at the same time, the consumption of this OTT is huge and it is increasing. And nowadays, not only this OTT channel, now you have so many online apps, platforms through which people are regularly downloading, viewing, listening, or consuming a lot of online information and data. Now, in all these cases where the recipient is a non-registered person like you and me, who is like a common citizen who is using this data for themselves, their family, so they cannot be made liable to pay tax under RC. So the government has no choice but to make that foreign supplier of service liable. And for this, there are special provisions because generally you cannot bring a foreigner under your tax net because you will not be able to have any access or control to that. So for that reasons, we have special provisions under section 14 of the IGST Act, which makes registration, they are given specific provisions how they have to register, how they have to appoint a person in India, so that government can have a control of them. Now here we are studying returns where these foreign suppliers who are sitting outside India are required to furnish their returns of whatever supplies they have made to a non-registered person in India? Please read.
GSTR 5A return for persons providing OIDAR services to non-taxable online recipient or registered persons other than non-taxable online recipient or online money gaming from a place outside India to a person in India. Every registered person either providing online money gaming from a place outside India to a person in India or providing OIDAR services from a place outside India to a non-taxable online recipient referred to in Section 14 of the IGST Act or to a registered person other than non-taxable online recipient shall file Form GSTR 5A by 20th of the month succeeding the calendar month part thereof. Form GSTR 5A needs to be filed even if there is no business activity, that is, it is a nil return for a tax period.
Continue. What is the default in furnishing returns?
Default delay in furnishing return, Section 46 and Section 47. Notice to return defaulters, Section 46, read with Rule 68. A notice in prescribed form is issued electronically to a registered person who fails to furnish return under Section 39 normal return or Section 44 annual return or Section 45 final return or Section 52 TCS statement. The notice requires the registered person to furnish the return within 15 days, failing which the tax liability will be assessed under Section 62 based on the relevant material available with the proper officer. In addition to tax so assessed, applicable interest and penalty will also be payable. Late fees for delay in filing return, Section 47. Late fees applicable for delay in furnishing of return, detail of outward supply as per provision of Section 47. Delay in filing any of the following by the respective due dates attract late fee. Statement of outward supply, Section 37. Returns, including returns under QRMP scheme, Section 39. Final return, Section 45. TCS statement, Section 52.
So, late fees is applicable for furnishing returns, outward supplies beyond the respective due dates. Now, we all know what are these returns. So, till now we have studied outward return, your final return, your returns under the various QRMP schemes, etc. And you have the TCS statement. Interestingly, nothing is written for TDS because that is to be done by government itself. Now, quantum of late fee prescribed is that for late filing of these statements or returns, it is 100. But when we are saying 100, you have to remember we are studying only one act. So it is not 100, it will be 200 per day. And 5,000 will be 10,000, whichever is lower. So upper cap is given. So first is per day fees subject to an upper cap, right? However, this has been reduced post COVID and there is a relaxation given. But let us proceed. Please read.
It may be noted that the late fee payable by a registered person for delayed filing of a return and/or annual return under Section 47 is with reference to only CGST Act and an equal amount of late fees payable by such person under the respective SGST UTGST Act as well. Hence, the late fee amount mentioned herein pertains to both CGST as well as SGST UTGST.
Perfect. Go ahead.
Rationalization of late fees for delayed filings of Form GSTR1, GSTR3B, GSTR4, GSTR7, and GSTR9. The late fee can be waived off partially or fully by the central government, Section 128. In view of this, late fee for delayed filing of Form GSTR 1, 3B, 4, 7, and 9 have been rationalized as follows. For delayed filings of GSTR 7, the amount of late fee payable under Section 47 by the registered person required to deduct tax at source under, under the provision of Section 51 for delayed filing of GSTR 7 shall be as follows. Rupees 50, 25 each under CGST and SGST for every day during which such default continues, or 1000, whichever is lower. Where the total amount of central and state tax deducted at source in a month is nil, the total amount of late fee stands waived.
Now, this is important because the late fee that we studied above of 100 per day per act is now no more applicable because we have this. Yeah, please read.
Registered persons who have nil outward supplies in the tax period whose total amount of tax payable in the GSTR 3B is nil as the case may be. The late fee is rupees 500, 250 each, or rupees 20, 10, 10 CGST and 10 SGST for every day during which such failure continues, whichever is lower.
So 20 is per day and capping is 500. This is what is important. So now what was there as 200 per day and 10,000 has been reduced to 20 and 500, but condition is whose turnover, whose total amount of tax payable is nil. Second,
Registered persons other than those covered in one above whose aggregate turnover is less than equal to 1.5 crore in the preceding financial year. 2000 or rupees 50, whichever is lower.
next,
Registered persons other than those covered in one above whose aggregate turnover in the preceding financial year is uh, 5 crore,
5 crore or more.
5 crore or
Sorry,
more.
greater than or equal to 5 crore and less than 1.5. Sorry, greater than 1.5 crore but less than 5 crore.
Yes. So the late fee is rupees 5,000 or rupees 50 for each day,
Yes,
whichever is lower.
and then
Registered
last bracket.
persons
Hmm.
whose aggregate turnover is more than 5 crore in the preceding financial year, the late fee is 10,000 or rupees 50 for each day, whichever is lower.
So this is how the late fee calculation has been rationalized depending upon your, firstly, if the liability is nil, then anyways it is the least. But if you have a liability, then depending upon what is your turnover. So if you're a small taxpayer, the fees is lesser. If you are a bigger taxpayer, then only the fees is higher. But important to note is the per day fees is same in all the three categories, irrespective of turnover. What is changing is only the upper cap. So this is mainly beneficial for those who many times people are unaware that they were supposed to file returns. Sometimes, like recently, a matter had come to me where a person who was under the old VAT laws was transitioned to GST law, but that person was not knowing because he felt that since his turnover is below 20 lakhs, though he was registered under VAT because the VAT's registration limit was lesser than 20 lakhs, it was 10 lakhs, and different states had different limits. So under VAT, that person was registered. But under GST, the person need not take any registration because his turnover was below 20 lakhs. So the person himself did not transition to GST. However, the system automatically shifted him to GST, which he himself was not knowing because he never did any compliance because he was always under the impression since I'm below 20 lakhs, I need not do anything under GST. Rather, he felt that he's not even covered under GST. Now, after 8 years, he is receiving a notice from GST department saying that you have not been filing returns from 2017. So till now, pay so many lakhs of late fees. Now, for such person, this is very beneficial, where at least the person has a capping of rupees 500 1 month. Otherwise, if you go by the original, it is 10,000 per month as the capping, which would have run into lakhs. Now, making it 500 per day means per year it is only 6,000. So even if the person has delayed for 7, 8 years, it is not more than 50,000. So this is how it is benefiting to people who have missed out on filing of their returns. Yes. Now for late filing of composition dealer returns. Please read.
For delayed filings of GSTR4, amount of late fee payable under Section 47 by a composition supplier who fails to furnish Form GSTR4 by the due date shall be as follows. Where total tax payable in GSTR4 is nil, then rupees 500 or rupees 20 for each day, whichever is lower. Registered persons other than those covered in one above, rupees 2000 or rupees 50 per day, whichever is lower.
Next.
For delayed filings of GSTR 9, Delayed filing of annual return, registered person having aggregate turnover less than equal to 5 crore in the relevant financial year, rupees 50 per day or 0.04% of turnover in the state or union territory, whichever is lower. Registered persons having following uh, aggregate turnover
Less than
more
5 crores. No, sorry, more than 5 crores, but less than 20 crores.
penalty is 100 per day or 0.04% of turnover in state or union territory, whichever is lower. Registered person having aggregate turnover of more than 20 crore in the relevant financial year, rupees 200 every day or 0.05% of turnover of registered person in state union territory, whichever is lower.
For 9C, read.
A delay in furnishing of complete annual return Form GSTR 9 plus Form GSTR 9C for the period from due date of furnishing of the said annual return up to the date of furnishing of the complete annual return. That is, where Form GSTR 9C is not required to be furnished, the date of furnishing of Form GSTR 9, where Form GSTR 9C is required to be furnished along with Form GSTR 9, date of furnishing of Form GSTR 9 if Form GSTR 9C is furnished along with Form GSTR 9, or date of furnishing Form GSTR 9C if Form GSTR 9C is furnished subsequent to furnishing of Form GSTR 9. Late fee is not separately leviable for delayed furnishing of GSTR 9 and Form GSTR 9C.
So, now what is important is 9, 9C both are part of your annual returns. Now, when we say both are part of annual returns, the challenge arose, what if one return is filed, one is not filed? So that is why they have used this terminology complete annual return, which is 9 and 9C both. And when now they are calculating your late fees, they are calculating late fees from the date when both are to be filed or both are not filed. So hence, if you'll see where 9C is required to be furnished. So what dates are to be considered? Date of furnishing of Form 9, if 9 and 9C are filed, both are filed. Date of furnishing 9C, if 9C is furnished after filing of 9. So whichever is filed later is what is considered. So that is why they have used this word for delay in furnishing of complete annual return. So complete means both. So until both are filed, your your late fee calculation will continue. And what is important, what is clarified very recently is that there is no separate tax, means late fees, for non-filing of one of the forms. Means there is no separate for 9 and again for 9C. So that is why now they are using the word complete. So late fees will be calculated only with respect to both forms together. Now here it is important to note that for people whose turnover is below 5 crores, we studied that 9C is not applicable. So for them, the late fee will be attracted only looking at GSTR 9, because anyways 9C is not applicable for them, right? So now we'll take our break of 15 minutes. So we meet around 9:15. Now only very small part is left about GST practitioners, and one more small part is left. So that we will complete today so that this chapter is concluded. Fine. So let us meet after a break of 15 minutes. You all can also have your breakfast if it is pending. And we meet at 9:15. in this next part, which is GSTP. GSTP is Goods and Service Tax Practitioners. Now, when the GST law started, understand what is the relevance of this. Let us say I'm the outside professional office, maybe a CA, lawyer, or any other tax practitioner. You are a business. Now you want me to file your returns. The portal made this facility on the GSTN that I will register myself like you are registering as a business. I am registering as a GSTP so that you can select me through the portal only. So when you log in into your GSTN of your business, from there, you can go and search me in the GSTP category and you can select me as your GSTP. Now, what was the purpose of this? So that, like how when you log in into your portal using your login credentials, you are able to view, file, download, upload everything on your portal. Once you select me as your GSTP, I will be able to do it through my login through my portal. So this particular concept was introduced so that a third party should be able to do your compliance on your behalf as a professional. Today, practically what is happening? I am only doing your compliance, but I am not doing as a GSTP. I am using your login credentials. So what login credentials you created so that the law recognizes that login credential as the businessman. You share the login credentials with me. I log in into the portal using your login credentials. So technically, even though I am that professional who is actually acting as a GSTP, but on the portal, since we are not using the GSTP route, you have not selected me as the GSTP. Rather, I may not have even registered as a GSTP. So technically, how the logic was designed, practically it is not happening that way. So the logic was so that once you select me on the portal, when I do your filing, portal will come to know that it is filing of your business, but done by an outside person who is the GST practitioner. But now since you give me your login credentials and I use your login credentials to log in and do all the filings, so it is as good as in the eyes of the portal, you are doing it yourself. There is no GSTP. So that is how, or that is what was the ideology of making this particular category. 48 provides for authorization of eligible person to act as the approved GSTP. A registered person may authorize a GSTP to furnish information on his behalf to the government. So this is the point which I was trying to explain. The manner of approval, their eligibility, duties, obligation, manner of removal and other conditions are what are provided in these sections. Now, a taxpayer may choose a different GSTP by simply unselecting the previous one and choosing a new one. So as I said, through your portal, you can go into the category of GSTP, select me, I become your GSTP and do your filing on your behalf. You want to change me, you go there, deselect me, select someone else. Standardized formats have been prescribed for making application for enrollment, certificate of enrollment, show cause notice for disqualification, order of rejection of application of enrollment, etc. So all these are from my side. So if I want to act as GSTP, how I will enroll myself, what will be the qualification, disqualification, how the portal may serve me show cause. This show cause is not for business or any type of tax evasion, but for not being eligible to be GSTP and so on. A GSTP enrolled in any state territory shall be enrolled as GSTP in other state territories as well. So again, same like the GST portal, it is not necessary that I should register in every state. So once I register anywhere, I will be deemed to be registered in all the states. Now, the eligibility and other things are explained here. So these are all basic eligibility for any professional in any law. I should be citizen of India, sound mind, not adjudicated as insolvent or even not convicted for any contempt of court. Plus, satisfies any one of these conditions. One, I am a retired government official with some minimum year of service and with a minimum grade, or enrolled as sales tax practitioner or tax return preparer under the indirect tax law for not less than 5 years, or acquired any of the prescribed qualifications. What are these? One, graduate, postgraduate degree or its equivalent examination in commerce, law, etc. Degree examination of foreign university recognized by Indian university, any other examination notified by the government. Now, this examination was earlier notified, it was being conducted a few years, then it was discontinued because all other things are anyway satisfied. Any degree examination of Indian university, foreign university recognized by Indian university, or has passed final exam of CA, CS, or CWL. Now, what are the activities which can be undertaken? Please read.
A GSTP can undertake any all of the following activities on behalf of a registered person, if so authorized by him: furnish details of outward supplies, furnish monthly, annual, or final return, make deposit for credit into electronic cash ledger, furnish information for generation of e-way bill, furnish detail of challan in prescribed form, file an application for amendment or cancellation of enrollment under Rule 58, file an intimation to pay tax under the composition scheme, withdraw from the said scheme, file a claim for refund, file an application for amendment, cancellation of registration, confirmation from the registered person shall be sought.
So for these three
Also,
actions, even if you do it, there will be an update flashing on the taxpayer's portal, and when only the taxpayer confirms, these three things will finalize. Otherwise, simply you doing it will not make it final. Yes.
also allowed to appear as authorized representative before any officer or of department, appellate authority, or appellate tribunal on behalf of such a registered person, provided he is enrolled as GSTP under Rule 83.
Further,
Furnishing returns through GSTP. When a registered person opts to furnish his return through GSTP, such registered person gives his consent in prescribed form to any GSTP to prepare and furnish his return. Before confirming submission of any statement prepared by GSTP, ensures that the facts mentioned in the return are true and correct. Thus, the responsibility of correctness of any particulars furnished in the return or other details furnished by the GSTP continues to rest with the registered person on whose behalf such return and details are furnished. The registered person, before confirming, should ensure that the facts mentioned in the return are true and correct before signature. However, failure to respond to request for confirmation is treated as deemed confirmation.
now this is interesting. So as a GSTP, if you have selected me, now when I will be uploading any details, which we saw in the previous page, all those things I can upload and which actually do not requires your concurrence. However, what it says is when a registered person opts to furnish his return through GSTP, such person gives his consent in the prescribed form to the GSTP to prepare and furnish returns. Before confirming submission of any statement prepared by GSTP, ensure that the facts mentioned is. So ultimately, GSTP will only prepare, you have to submit. But the point is, whatever GSTP is doing now, the GSTP is doing on your portal. So it is like this: when you authorize me as GSTP, I can open your GSTR1, I can upload, save all the invoices. Only the filing will be done by you because it will be requiring your consent, your DSC and all. Thus, the responsibility of correctness of particulars will always remain with the registered person on whose behalf such returns are filed. So even though actually I have prepared it on the portal through the GSTP mechanism, still it is you who will be responsible, and the registered person before confirming should ensure the facts mentioned. Interestingly, failure to respond to request for confirmation is deemed confirmation. Continue.
Other points. A registered person gives his consent and authorizes the GSTP in the prescribed form by listing the authorized activities in which he intends to authorize the GSTP. The GSTP accepts the authorization in Part B of the same form. The GSTP can undertake only such tasks as indicated in the prescribed form. The registered person may at any time withdraw such authorization. Any statement furnished by the GSTP is made available to the registered person on the common portal. For every statement furnished by the GSTP, a confirmation is sought from the registered person over email or SMS. The GSTP should prepare all statements with due diligence and affix his digital signature on the statements prepared by him or electronically verify using his credentials. If the GSTP is found guilty of misconduct, his enrollment will be liable to be cancelled and a show cause notice would be issued to him.
So all these are the steps how GSTP files your returns. Now, how to become a GST? Please read.
The procedure for enrollment of GSTP has been depicted by way of a diagram in is given below. Enrollment of GSTP, an application in prescribed form may be made electronically through the common portal for enrollment as GSTP. The application shall be scrutinized and GST practitioner certificate shall be granted in the prescribed form. In case the application is rejected, proper reasons shall have to be given. The enrollment, once done, remains valid till it is cancelled. No person enrolled as a GSTP is eligible to remain enrolled unless he passes such examination conducted at such periods by NASIN.
Now this exam has been discontinued. So it was there for first 2 years. Then now they felt it is not required. So they have discontinued. Continue.
Any person who has been enrolled as GSTP by virtue of him being enrolled as a sales tax practitioner or tax return preparer under earlier indirect tax laws shall remain enrolled only for a period of 30 months from the appointed date unless he passes the said examination within the said period of 30 months.
Now all these things are gone. Now we come to a very important point, that is information returns. Now what is this? See, I would like to link it with income tax law to have a better understanding. So in income tax, you have this concept since past couple of years of AISTS, which is your annual information statement or tax information statement. What is this information statement doing? So as we started our previous class where I said that why returns are required. So I told you that GST and other taxation laws have or follow the concept of self-assessment, which requires that the taxpayer himself, herself, itself files and furnishes all the information to the government. And on the basis of that, pays or assesses the tax and pays the tax. Now, when a self-assessment mechanism is provided, there also is required a scrutiny mechanism. So generally the original mechanism was you file your returns, any return, sales tax, not GST earlier, income tax, service tax, excise. And later on, the department will come to scrutinize either by way of audit or by way of assessment, whatever. However, now because we have so much of technology and we have so much of information in the public domain, the government felt the need that why not connect it with our portal so that we have an inbuilt cross-check mechanism. That was the thought process behind bringing in the concept of AISTS. And now they have gone a step further that whatever is appearing in AISTS is now also getting reflected in your returns. Firstly, auto-populated, then you have the choice of editing and changing. Secondly, interesting point is that if you are filing your return and you have edited some details whereby it is not matching with AISTS, the government portal, right now I'm talking about the income tax portal, will auto send you a notice or an intimation. So to this extent, the government is trying to reduce the role or involvement of officers. So at least the first step scrutiny should be done auto. Now this same concept is inbuilt in GST at a much larger level because For GST, every transaction has to be cross-checked because supplier uploads, a recipient takes ITC. Now the recipient is also given option to IMS to accept, reject. So now in GST, this particular internal check, internal cross verification is at a much larger scale rather at a transaction level. But at the same time, they have also tried to seek a confirmation or a cross evidence from external bodies. This is where this information return comes into picture. So the purpose of this information return is to make some public bodies like banks, insurances, all these land records, all the major dealers of cars and all. So from wherever you may be engaging in any commercial activity, the government using the power under this section is now making those bodies, those entities file or furnish information which will obviously be relating to your transactions for which they have the records, so that these transactions get reported to the government, and then government using the PAN number, GSTIN, bring it into one place, which is the AIS, TIS in case of income tax, so that the government software itself can do the cross verification. So that is the lines on which this particular concept of information, which is to be complied by, like as you see here, um, authorities who are responsible for maintaining records of registration, statement of accounts, periodic returns, or documents containing details of payment of tax, other details of goods, services, or both, or transactions related to bank account or consumption of electricity, transaction of purchase, sale of goods, property, right, interest in property under any law for the timing, shall furnish information. So a big category of persons are covered, and slowly and steadily, as the different departments get computerized and fully automated and fully connected through the public domain, slowly and steadily these details would be taken from many bodies and many organizations in the form of this information return. Now again, where the commissioner officer authorized by him considered that the information furnished in the return is defective, he may intimate the defect and then the defect shall be removed. Issuance of notice for failure to furnish the information return. Again, this is a logical point. So what is given? Where a person who is required to furnish information return has not furnished the same within the specified time, the said authority may serve upon him a notice requiring him to furnish such information within a period of 90 days from the date of service. Now, who are these authorities from whom these information, etc., has to be uploaded? That is what is this list talking about. Can you please read?
Taxable person, state government's authority responsible for the collection of VAT, sales tax, state excise duty, or central government's authority responsible for collection of excise duty or custom duty, income tax authority, banking company within the meaning of section 45A of the RBI Act, state electricity board or an electricity distribution or transmission licensee under the Electricity Act 2003, or any other entity entrusted with such functions by the central government or the state government, registrar or sub-registrar appointed under section 6 of the Registration Act 1908, local authority, other public body, association, registrar within the meaning of Companies Act, registering authority empowered to register motor vehicle under Motor Vehicles Act, collector referred to in clause C of section 3 of the right to fair compensation and transparency in land acquisition, rehabilitation and resettlement act, recognized stock exchange depository officer of the RBI, GSTN, UIN holder, any other specified person.
Now, these are the different, you can say, bodies, agencies who are right now connected or part of this section, who are required to furnish the information on an annual basis, though all may not be asked for all the information. So there are details provided as to who has to submit what type of information. But the point is that what is the purpose of this annual information return? That we need to identify and understand, right? Yes, please proceed.
Penalty for failure to furnish information return, Section 123. If the person to whom the notice has been issued under Section 150, subsection 3, fails the fails to furnish the information return within the period specified in said notice, the proper officer may direct that such person shall be liable to pay a penalty. Quantum of penalty rupees
Is 100
150
per act
each.
per day, 100 total per day of both acts combined and 5,000 maximum limit. Fine. So let us see what are some questions here. Okay. Can you just read the question so that we can quickly check, test our knowledge?
Which type of taxpayers need to file annual return under Section 44?
Yes. Can anybody answer? So who are required to file annual return?
Regular taxpayers, except
All registered persons, but then there is an exception,
except casual taxable person,
an
non-resident
RTP.
taxable
Why?
person.
Why? Because they may not be existent in the next year to file the annual return. Then,
ISD,
because anyways they are not having any outward supplies, and
OIDAR services,
OIDR services. Okay,
TDS, TCS.
correct. Because again they are not dealing with any outward supplies. So these are the persons who are excluded. Next, second question is
Is an annual return under Section 44 and a final return one and the same? Explain.
yes. Anybody would like to answer whether the annual return, that is GSTR 9, and the final return, that is GSTR 10, is it one and the same?
No, sir, they are not same.
Can you highlight the difference which you feel is
Annual return is filed by every registered person, paying
okay?
tax as normal rate.
Acha. Mm-hmm. You have to pay tax through annual return. Yes, beta, Geeta.
No, sir, as a normal taxpayer, they are paying the tax.
So what is the difference between an annual return, that is GSTR 9, and a final return, that is GSTR 10? That is a specific question.
Yes, yes. Final return when cancellation is there, no? At that time,
Correct.
final return is filed.
And annual return is?
Annually on 31st December.
So basically, see, annual return is a compilation of all your monthly returns that you have filed. And if something is missed out, something has to be finally corrected. That is the opportunity given in the annual return. But final return is like now you are saying ki bye bye, good day. This is the end of my uh, relation with you as a taxpayer. So I'm giving you my last statement of whatever details I have till date. So that is what is a type of a final return. Also, final return is to be filed because there may be some tax liabilities outstanding, and anyways you are not going to file any further return. So it is the last opportunity to edit, correct anything for that current financial year. And annual return is filed always in the next financial year, whereas GSTR 10, that is final return, is filed in the maybe filed in the same financial year, because the moment you seek cancellation, you will have to file this return. So there is another difference, that annual return would be always in the next financial year, whereas this GSTR 10 final return generally is in the same financial year when you are seeking the cancellation. Yes, next question.
Do input service distributor need to file separate statement of output supplies GSTR1 with their return? Discuss.
Yes, anybody would like to answer this? What is the situation relating to GSTR1 for ISD? Yes, Geet.
Yeah, so no, ISD are not required to file GSTR1 because they are not making any outward supplies. They are just registered for the purpose of distributing the input tax credit to their branches. So they need to file the GSTR6 only.
And there is no transaction with any outside world. So there is no need of any GSTR1 because they are not going to report any type of interstate, intrastate, B2B, B2C. No such reporting is there. It is simply passing on the credit. In fact, there is no supply itself, the biggest point. See, when they are distributing credit, it is not that they are showing that it is an outward supply. For ISD, there is no outward supply. For ISD, it is simply using the ratio of the turnover of the branches to distribute the common ITC to those branches. Fine. Next question.
Is it compulsory for a taxpayer to file return by himself? Explain.
Yes. Anybody?
No, sir. Tax practitioner can file.
Correct. So if a taxpayer wants, he can authorize through the portal a person to be treated as his GSTP, and then that person can file, can prepare the return on behalf of the taxpayer. Correct. Next question, Bida.
Mr. Anand Kumar, a regular taxpayer, filed GSTR1 for the month of August before the due date. Later, in the month of February next year, he discovered error in the GSTR1 of the month of August already filed and wants to revise it. You are required to advise him on the future course of action in this scenario.
So a simple example, some details which you have furnished in your August return and maybe pertaining to August only have some mistakes, some errors. Let us also add one more situation. You missed to upload some invoices of August in August. And all these things are identified by you in February. Let us say there was some audit going on, some internal audit happened, and then all these things are identified. In this particular case, the question is, the question is that if you want to correct this in February, what is the course of action provided by law in this case? So who would like to answer this?
Should I, sir?
Yeah, please.
In this case, Mr. Anand has an option to rectify the error or omission which he has made in the previous month of the GSTR through the GSTR1 of the subsequent months. But there is a time limit to correct the errors. So in this case, the errors were occurred in month of August, and he wants
Let us
to
say August
rectify.
2025.
If he's made the error in August 2025 and he has discovered in February 2026, so in that case the last date to rectify the error is 30th of November, or the date on which he has filed the annual return, whichever is earlier. So in which any case the last date is 30th of November, but here he has noticed the error in the month of February next year. So he is not eligible to rectify the errors in the month of Feb 2026.
He is not eligible.
Yeah.
Why? You said November is the last day, na? So that is why I'm asking you the.
Sorry.
So that is why the
November
period.
of the following financial year. Yes.
Yeah, he is eligible. Actually, he is eligible to rectify the mistake.
Correct.
Yes.
Yeah.
So if you identify the mistake in February 26, so any return from February 26 onwards, you can rectify. Okay, let us say he would have identified it in June 26 next year. By that time, he has filed all his monthly returns up to 31st March. So my question is, can he rectify this mistake in July or August 26 returns?
Yes, he can if he has not filed the annual return.
He has not filed, but all his monthly returns up to 31st March 26 have been filed. That is, all monthly returns pertaining to the current financial year are filed. So current financial year monthly returns are done, annual return is pending. And when, let us say, he is preparing his income tax returns in July, August next year, he identifies some errors, omissions. So can he revise it in the next year's monthly returns? This is my question. Or when the law says you have to do it up to 30th November, vagara, it means the law wants that you do it up to 30th November next year, but using one of the monthly returns of the same year, that is 25-26. This is my question.
He can rectify using the GSTR1 of the next financial year up to
Also,
the
obviously up to the timeline provided, 30th November or filing of annual return. So even using the next financial years, any of the monthly returns like June, July, August, he can rectify the mistakes of 25-26 financial year, right?
Yes, sir.
Yes, sir. If suppose if the case is really the error happened in April, then it is not possible. Since it happened at the earlier year, it can be rectified before 30th November.
Which April? Which April? April
See,
20?
yeah, 26. See,
So that
now,
also can be rectified in July 26, no?
yeah, that is rectified. But that is a subsequent year, sir. I am talking about this year, the August
Correct.
2025. It can be rectified up to 30th November or the actual date of filing annual return, whichever is earlier. That is true. But in the case of if this mistake is pertaining to April 26, then we have one more year.
That is okay. So you have one more year, right?
Yeah.
Hey, so let us confine our discussion to August 25 error. Fine. Now I have a follow-up question. I have a confusion because on one side you are saying the maximum time to rectify is 30th November. On another side, you are saying you have 3 years. If you remember, we studied some time limit of 3 years for GSTR1 also, 3B also. So is it not a conflict? At one side, you are saying you have 3 years. On the other side, you are saying no, you have maximum next year's 30th November to rectify. Is it not self-contradictory?
No,
So
sir,
that
it's not talking about this. Actually, if the GST return one itself is not filed, for that the time limit is given up to 3 years from the due date of GST filing date.
Okay.
That is different. This is different. This case is very peculiar that there is a mistake. They filed the return, but they want to rectify the mistake.
Okay. So it means both are independent and there is no self-contradiction, right?
Exactly.
So now I have another follow-up question. So as you all are now, I am a setting track, and you all are on the track. Now my next question is: let us say I miss to file my returns of 25-26, and I have 3 years, as we just said. So I can file it. Let us say this August 25 return, I can file up to September 28. That is up to the 3 years time limit I have. Let us say I'm not even going up to 28. Let us say in 27, that is 2 years from now. Till then, I have not filed any of the returns for some reason. And just assuming the portal has also not blocked any of these things, though it has the power to block. In fact, the officer has power to cancel. So let us say, even if the officer has initiated cancellation or suspension, then in 2027, I go and I tell them that there was some tragedy, there was some problem, etc., etc. Now I want to file, and they allow me to file, and I'm very much within the 3 years time. So let us say in May 2027, I file these pending returns of August 25 to 31st March 26. Let us not talk about April 26 onwards because that changes the financial year. So August 25 to March 26, I file. In the month of May 27. Fine. Now I find immediately after a month some mistakes that I made in these returns which I filed. So the returns of August 25 to March 26, I already filed late. This late happened till 31st, till May 27 when I filed them. But immediately after filing them in May 27, somewhere in June, July 27, I identify that, oh, I made some mistake. Now, can I rectify the mistake? Because obviously one more thing, my annual return would also be pending of this year, and for annual return also we have 3 years, correct? So same like monthly returns, annual return is also given 3 years to file date. So since monthly was pending, annual was also pending. So annual maybe I'll be finding it after 2-3 months. So I firstly complete my monthly compliance in May 27, and maybe by August September I would have filed the annual return. But before that, I identify some mistakes in my monthly returns of this August to March. Can I revise it? Can I revise means sorry? Can I correct it?
Sir, your question is very clear. See, the thing is that you filed the return in the window period allowed for 3 years. You filed the late return, you filed within the
Right.
time limit, but you want to rectify the mistake which happened filed in during this period. Whether it is allowed or not, that is your question, right?
Simple. Correct.
But it is not allowed, sir.
You're sure it is
Because,
not allowed?
yeah, see, here the rectification they are telling is very clearly it has to be filed 30th November or due to annual return, whichever is earlier. We
See,
cross
when you are saying 30th November, you are incomplete. It is very
okay
important which 30th November.
next year.
Next year to what? See, this is where reading of law is very important.
Okay.
Do you have the provision in front of you?
No. I'm not having any provision in front of me.
No,
I'm
so
just
you should never give any opinion without reading the bare provisions, because that can change the answer. See, I am allowed to rectify by next year's 30th November. Correct? This is what we are saying, right?
yeah. Your question is tricky. Really, that is a very valid question. Actually, I really appreciate on that.
No, we are facing this in our day-to-day practice. So that is why I thought I'll put it, because see, when you will be practicing as a chartered accountant, now nobody will come to you for regular issues. That everybody is clear, right? What is important is they will come for these different type of issues. So now I am opening what is written. Swaminathan, can you please read this?
Yes, sir. The time limit for making rectification. The maximum time limit within which the rectification of errors, omissions is permissible is earlier of the following dates. 30th day of November following the end of the financial year to which such details pertains, or actual date of filing of relevant annual return.
So my relevant annual return is yet to be filed. So let us say now we are in 2027. And I am yet to file my annual return of 25-26. So I first filed the pending monthly returns, but after filing immediately I identified a mistake. Can I rectify? So this second date is pending. First date 30th November is also pending, but that is 30th November of 27. This is the main point that we have to interpret. Now you have the provision in front of you. I think now it will be more precise to interpret.
I think, sir,
I have also
30th
highlighted the
November.
relevant portion.
Yeah, I think I can revise my answer according to this, because we filed the return now, within which the 3 years window period. So now only we filed. So we have timeline to file the annual return as well.
I think, sir, the 30th November date is related to the invoice date to
See,
which the transaction
I am
relates.
not giving you answer. My question as a teacher is not giving answers. That is what
Okay.
Google does. A teacher's, I believe, skill also, and a teacher's responsibility is also asking right questions.
Sir, no
Yes, yes.
rectification will be done because 30th day of November following the end of financial year to which such details pertains. Whichever is earlier is given, no? So, sir, no return can, no rectification can be done. I think so.
See, things are in front of you. I have given you the facts, and these are all real life situations. You'll agree to this that this may happen. Out of 1,001 taxpayer will have this situation, right?
So, yes, sir.
And that
But
one
no
person will come to you or should come to you. That should be your understanding of the law. And let me tell you, for that you need not be any experience or a person practicing for past 20 years, not required. You have the law in front of you. Even a person like me who is practicing for more than 20 years, or a person like you who may have just qualified, we are at par when it comes to GST law, because it is new And more than new, it is totally different from previous law. So what was there in previous law cannot be applied here. So we both have the provision in front of us. We only need to correctly interpret.
Yes, sir. Keeping that in mind only, as rightly said by Kita also, to which such details pertain. That is, even my earlier answer, based on that only I given my first answer.
But then
But
you
I am
rectified your answer.
I rectified my answer later. The
And
reason
I
that
did not misguide. Let me clarify. And I did not misguide.
no, you are not misguiding, uh, but still I am going for second opinion after reading this. The reason is that the 3 years window is given on the first case, but because of which they filed it. But for that they need to file the annual return as well, for which it is there. It is also pending is there, but they need to pay that penalty, like whatever the late filing fees, all these things they will pay
That is
it.
okay, sir. That anyways I have to pay. I am ready to pay. My question is, can I revise the returns which I filed it? You have the provision in front of you. Can I not revise? Sorry, rectify. The answer is no,
To
as
which
rightly pointed out
yeah,
by
yeah,
Geeta.
yeah,
See the
to
language,
which
and that is why I've
yeah.
highlighted the relevant portion. It clearly says 30th November following the end of the financial year to which such detail pertains. The detail pertains to which financial year? It pertains to the financial year 25-26. I am filing it in 27. That is my mistake. I will pay late fees, interest. That is a different part. But the question is, when it comes to rectification, can I rectify that return after filing late? Answer is no, because as rightly pointed out, it is whichever is earlier, not even later. Had it been later, then maybe the answer would be different, but it is whichever is earlier. And when we read the first part, it says 30th November following the end of the financial year to which the details pertain. The detail pertains to 25-26. There is no doubt about that. Reported in 27, but 30th November 26 will be the first date as per this rectification provision, which has gone, even though the second date is still pending because you are yet to file annual return, but that makes no difference because it is whichever is earlier, wherever it is written. It is earlier of the two dates. Correct? So what I wanted to bring out from this example, students, is, see, you are in a phase where GST has just been revised, income tax new law is in taking shape. You have the best opportunity to cement yourself as a good tax practitioner. But for that, a very important requirement is please read the law. Don't presume. In fact, many times I don't even prefer reading any book, because many times, like even if the books which I am writing or I have written, I will not copy paste the law. I will mold it in my language. But that is where anybody may go wrong. So whenever you come across a query, go back and read the provision, keeping that query as the backdrop. This will, one, help you understand the law better, because when you apply the law in different situations, you get a new realization like how you got now. Two, you will also get a proper solution. So simple. What I want to tell you from this all discussion is, go back to the law every time you face a question. Don't presume, don't hallucinate like how AI does. Make your own understanding. And the most important part, don't ask Google. Don't ask. Yeah. Because I'm sure if you put a question for this, I don't think even Google will be giving you right answer, because many times Google will only reiterate the provision as it is. But if you want answer, you have to read, interpret, and apply the law yourself. Please do that. That will help you have a very good career, especially in taxation. And let me again repeat, you all are in the best phase because GST has now recently been revised. It is only 8 years. 8 years is nothing. Still, many judgments will come which will shape GST. And an income tax law is again being revised. So you have a very good opportunity. So I think with this, we conclude our today's deliberation. We have completed this chapter. So I'm closing with this important input insight. Please read the law. Every time you come across an issue, go back to the bare law. Full stop. Fine. So thank you all. Good day.
Yes, sir. Thank you.
Enjoy your Sunday by studying. Though you may also take out time for your personal entertainment, but also study and upgrade yourself. Fine.
Thank you,
Thank
sir.
you. Thank you.
Sir.
Good day. Yes, Ashok ji. Happy Sunday, Ashok ji.